All right, we are live. Welcome everybody to Learn It Live. I am so excited today. We have a good treat for you guys. I'm watching it on my phone, sorry. We're going to be talking about educating business owners and how to retain and invest their key managers with Stonehouse Insurance Services and Stonehouse Consulting. So I'd like to introduce you to Michael Emerson, who will be giving you a little bit more information. So go ahead, Michael, and thank you guys so much for being here.
Thank you, Heather, and welcome everyone to our presentation. Just before we start, I'd like to just advise everyone the presentation gives general information that shouldn't be construed as specific tax or legal advice. Clients should seek the advice of a qualified tax or legal professional for any specific situation that we may talk about. So today, I'll be doing the introduction into what we'll be talking about. I am director with the Stonehouse Group. I'll be giving you a quick overview of the Stonehouse Insurance Services profile, and then our presenter, Tom Summers, he will be talking to you about protecting your business from losing a key manager and some of the solutions and alternatives in relation to that. At the end, we will talk to you about some of the key things that come out of it and in-game and action plans. If you do have any questions along the way, then you can submit those into the comments field. So Stonehouse Insurance Services is a local California business and personal risk management insurance specialists, the go-to partner for commercial risk and business insurance solutions. Your long-term security and business success is our ultimate goal and the passion that drives us as a company. Our unique offering gives you access to the services and products of the nation's top insurance companies. We do serve over 8 key business industry sectors, and we tailor coverage to meet your needs using very much a consultative approach. Our presenter, Tom Summers, is a dedicated certified financial planner. Tom has a wealth of business, insurance, and financial experience. He has been an executive in various service industries in New York, Europe, and California. Tom has a very thoughtful, innovative advocate for his clients and dedicated to helping them achieve financial security. He holds Master's in International Relations and Economics from Columbia University in New York, and very active in the Temecula Valley Chamber of Commerce as an ambassador, co-chair, and past ambassador of the year. So over to you, Tom, and let's move forward with the webinar for today.
Great. Thank you, Mike, and thank you everybody for joining me and Stonehouse Insurance for a discussion of how to protect your business against the loss of key personnel. So have you ever asked yourself, who runs your business when you're not there? What are you doing to keep her there? Or if you couldn't work, who would hold your company and clients together until you were able to get well? Or perhaps when you finally want to retire or sell your business, will it be helpful to have an experienced management team in place? Key people are valuable. The death, disability, resignation, or retirement of a key person could have a big impact on the future of your business. Today, we are talking mostly about death and disability. And I mean both of those when I say loss or death, just to keep it simple. But we build these programs for other events as well, including golden handcuffs for employee retention, or funds for retirement buyout, and various other purposes as well. We like to say that when we build these programs, $1 you put into the program actually wears the hats of many. So the purpose of key person coverage is to indemnify a business. That means to replace the monetary value of the services that would be lost due to the absence of the key person, whether by death or disability. Other expenses could be the cost of finding, hiring, and training a replacement. There could be a reduction in revenue for the company if you lose a key person. You could also have the credit of your company impaired. In the event of a disability, a specialized disability insurance policy can protect your company if an important person gets sick and can't work for an extended period of time. You have probably insured your business against the loss of buildings and equipment, but what about your firm's most valuable asset? The death of a key person could have a big impact on the future of your business. Machines, buildings, inventories can be replaced. Key people are much harder to replace. Just think of the time and expense it takes to hire and train a skilled employee. So who exactly is a key person? We focus on people whose contributions are significant for your business and whose death or disability would result in a financial strain on your business. Many times it's the owners themselves who are the most valuable assets of the business. Additionally, non-owner employees who contribute significantly to the bottom line and whose death would result in financial strain on the business are considered key people as well. So who is a key person? It could be a highly salaried employee. It could be your top salesperson. It could be an executive with decision-making power to direct the business. It could be your financial genius. Or it could be an employee who's highly visible to the community. Or it could be someone with special or unique talents. For example, here in wine country, it might be your vineyard manager or your award-winning winemaker. I know we have several of those here in the Valley, fortunately. Key people might be those who have the vision and expertise to build the future of the business. What kind of challenges come with the loss of a key person? There could be disrupted management. Suddenly another employee must assume the management duties of the absent key person. Operations can be disrupted. There could be a reduction in earnings, either through decreasing income or increasing expenses. Both of those may follow the death or disability of a key person. There could be impaired credit. Creditors might question the future of your business. They may press for immediate debt repayment and adopt a wait-and-see attitude about further credit. There could also be a loss of confidence. Employees in the company may lose confidence in the future of the business due to the loss of a key manager. And cash might be needed to fulfill obligations to the deceased employee's family, as just one example. So how much is your key person worth? There are different valuation methods that are possible. The most common is capitalization of salary, where the salary of the person is multiplied by a factor, usually 2, 4, 5, 6, 7, 8, 9, or even 10 times. There's also a calculation of the cost of replacing an employee, or for an employee who's particularly important for the profitability of the company, you could use a measure like 1 year's worth of profits, for example. Or another measure might be a calculation of the present value of lost earnings or the employee's contribution to earnings. There are no set rules for determining how much coverage is needed. The goal is just to figure out a reasonable and practical amount that will take care of your company's needs. Before we go on to the next section, I just wanted to check and see if any questions might have come in, and if so, we can deal with them now.
Hi guys, we currently do not have any questions, but just so everybody knows while watching, if you do have questions, please drop them in the comments and we will gladly address those questions. Thank you guys.
Okay, cool. Thanks, Heather. So let's take a quick look at how key person insurance actually works. Step 1 in the process, the business sets a value and applies for insurance on the key person's life. The executive, the employee, should be properly notified and needs to consent in writing to the purchase of life insurance on his or her life. This process is known as notice and consent. You, as the employer, would keep a signed copy of the notice and consent document in your permanent tax files. The IRS or your tax advisor may request a copy, and without it, you risk having the death benefit on the policy becoming taxable rather than tax-free as it normally would be. So keep this document in a safe place. Step 2, after obtaining the employee's consent, the business buys a life insurance policy. It names itself as the beneficiary and proceeds to pay the premiums. Step 3, if something happens to the key person, the life insurance death benefits are paid to the business income tax-free. And this is, of course, provided that the notice and consent process was followed as it needs to be. Step 4, the business then uses the proceeds of the life insurance policy to offset any losses it might have experienced in sales, productivity, credit, and the cost of replacing the employee. So here's a diagram that illustrates how the process works. On the left side, we have the business in the middle giving notification to the employee on the left, and the employee giving his or her consent to the purchase of life insurance owned by the company on his or her life. On the other side, we have the business buying the life insurance policy, paying the premiums to the life insurance company, and then if something happens, the death benefits are paid to the business. The business owns and controls the policy. The business is the premium payer and the policy beneficiary, and the business receives income tax-free death benefits. The business actually controls the policy as the owner, the premium payer, and the beneficiary. The employee doesn't have any rights in the policy. Although the company could later make a decision in its own option to give the policy to the key employee or transfer it to the key employee if the company chooses to do so at a later date. Or under a separate agreement, the key employee could be given the right to purchase the policy at a later date if the business no longer needs it. Let's spend a few moments focusing on the tax aspects of premium payments and death benefits. We'll also very briefly address the accumulated earnings tax and see how a corporate resolution might fit into your plan. Perhaps unfortunately, the tax code denies a deduction for most premiums paid on a policy where the business is the beneficiary under the policy or where the business has the right to designate the beneficiary. In this design, because the business is the owner and the beneficiary of the policy, the premiums are not income tax deductible. However, there are no income tax consequences to the key person, to the executive who has been insured under this type of an agreement. With regard to the insurance proceeds, generally death benefits are received income tax free. The policies are not typically included in a key employee's estate unless the employee also owns part or all of the business. If the key person owns part of the business, the proceeds of the policy may be indirectly included in the taxable estate to the extent the proceeds increase the value of the employee's ownership interest in the business. You need to consult with a tax professional to be sure you understand all the tax implications for your particular situation. Just a quick word about the accumulated earnings tax. It generally only applies to C corporations, but the main takeaway is to know that the IRS considers key person insurance proceeds a legitimate business need. But for this reason, it's also important to document the key person amount that was chosen to cover the employee. For this reason, your company may want to adopt a corporate resolution about the value of the employee. There doesn't have to be an IRS filing made at the issuance of the policy, but you should keep this corporate resolution on file. We will, of course, help you with sample documents and help you to design your program. But again, in this type of situation, you want to be sure to consult your own CPA. Now, although it's not required by law, your company's governing body may want to adopt such a corporate resolution. So what kind of insurance policy might be chosen for key person coverage? Permanent life insurance is a great choice because it needs to be, it's really taking care of a permanent need, so a permanent policy is the most suitable. And also, as the years go by, it accumulates policy cash values in the policy, which grow tax deferred, and they can be used through tax-free withdrawals for any corporate purpose. So it becomes a very, very flexible instrument, and it's a great example, again, of how $1 that you put into one of these programs can really wear multiple hats and do a number of different things for the company and also for the business owner. However, where cash flow is an issue, which it often is, especially for a young company, convertible term life insurance is a great way to start. It's very affordable. And because it's convertible to permanent coverage later on, it provides a lot of flexibility. There's also the possibility of putting on the life insurance policy what's called a waiver of premium rider. It can provide great value because if the insured executive becomes disabled, which could have an impact on the company and its financial performance, the disability waiver of premium would allow or would require the life insurance company to pick up payments of the premium. So it would relieve the company of some financial pressure at a difficult time. So before we go on to the possible alternatives for insurance in taking care of key person coverage, I wanted to ask Heather again, do we have any questions that might have come in?
We don't have any questions yet. It sounds like they're just digesting all of this information. There's a lot of info for sure, and you're covering it pretty well, but we'll keep an eye out. So again, if you have any questions, just drop them in the comments.
Okay, great. Thanks, Heather. So life insurance is perhaps the most common and we believe in many ways the optimal way to cover key person needs, but it's not the only way. So what are some of these alternatives? One might be a sinking fund, where you put aside a little bit of money over time and accumulate enough money to cover the need, whatever it might be. So the sinking fund is definitely something that some companies try to do, but there's a question of timing because you don't really know when something might happen with this employee, either a disability or a death. So you don't really know when the fund is going to be ready to cover that cost. Also, there's the opportunity cost of putting a sizable amount of money to the side in a dedicated account that can't be used for other business needs. And it's difficult sometimes to accumulate large sums in that way. And for certain corporate structures, it might result in extra taxation. So those are some of the issues to think about with regard to a sinking fund. Of course, if something happens to your key employee, you might be in a position to borrow some money to cover the costs that are required to look for a replacement, hire replacement, train, and all the things that go along with that. Some of the issues with borrowing are interest, fees, and costs. Also, if you've just lost a very visible and important part of your business in losing that key person, creditors may not be willing to lend the amount of money that you're looking for. Also, although interest rates are very low right now, and maybe the interest costs of borrowing wouldn't be very onerous, in the future, interest rates could look completely different. So there's interest rate risk. And then there's the problem of defaulting on a loan if other things come up at the same time and the business has difficulties. And again, there's the opportunity cost. Maybe you'd rather borrow money for something else. The other thing another way to cover the expense of covering a key executive would be to use corporate surplus. The issues here are kind of obvious. There may not be a lot of surplus on hand at that time. It might be here today, but it might not be here tomorrow. And as always with a business that's growing, trying to expand and take care of different situations, there might be a higher and better use of business funds. And so it might be good to have another way of paying for the key person. Key person insurance, again, is like a self-completing sinking fund. The money's there right from the get-go. There aren't any interest payments. Opportunity costs are minimized because to create that large sum of money, you're only paying premiums, which is a tiny fraction of the total amount. Also, if you're using permanent cash value insurance, you have access to policy cash values as they grow over the years, and those can be used tax-free. And if something does happen to that key employee, you have tax-free death benefit that results. And there have been many programs where the whole cost of the program has been paid out of one or two untimely deaths. So that's always a regrettable situation. We don't want anything to happen to our employees or our colleagues, but there are ways of taking care of it from a financial perspective, and that's one reason banks love this kind of insurance. Also, creditors often require life insurance on key personnel as a condition of extending credit. So getting to the end of our presentation, just final thoughts. Your key executive might make a little mistake. Your company can absorb little mistakes, but the lack of a key person insurance policy can be a big mistake, and it's big mistakes that can absorb a whole company. Again, one reason insurance is the preferred way to cover the cost of replacing your key people. It provides access to policy cash values that can be used for any corporate purpose. And when the death benefit is paid, it's completely income tax free. So it's quite a bonanza for the company and can be used also to take care of the employee's family. So that's all I have really for today. Heather, if any questions have come in, we can deal with those now. And if not, then Mike, I'm ready to switch the presentation back over to you.
I don't have any questions right now. Again, I'm sitting here and I'm like, whoa, my mind is blown because it is a lot to think about. And it's kind of like one of those hard things to consider, but it's such a very important discussion, especially with uncertain times that we're in right now. You know, you really need to consider what is best for your company or your legacy in terms of that. And so I think it's a lot to digest, but it's really important to think about. So we don't have any questions right now. So if Michael, if you wanted to kind of proceed, and if we get any questions at all, we'll make sure to ask.
Mm-hmm. Okay, thank you, Heather. Sorry if I can get my system to change to the next slide. There we go. So thanks, Tom, for, as Heather said, it's a lot to digest, but very important information about what is key in looking after our key people, and a very succinct way to be able to go about it. So some key questions to think about. We're interested to know what you might be surprised about in our presentation today. And hopefully we raised some issues that were new to you. It's also interesting to know what was the most meaningful moment in today's presentation. And also, are there any other business owners or companies you know who would benefit from this seminar and its topics? Also, Tom is available for a one-on-one consultation to actually evaluation of your business needs and what we'll be sending out later on is an email that will actually provide some details in relation to that. So what you can do at the moment, if you're interested in getting further information, place your email address in the comments box to receive our email with details so that we can actually get your feedback, provide information about future Stonehouse presentations. Some of the topics coming up in the near future, in fact, on this coming Thursday, is a buy-sell agreement funding. And then a future one next month is executive bonus and retention solutions. We'd like to know what's the best way to keep in touch with you and what you would like to do next and see how we can help you. Just confirming then some of the notifications. Provide us your email so we can send information to you about what's coming up. You can provide us feedback. We do have a Stonehouse report that we put out every 2 weeks that has the latest news and updates for all local businesses, particularly in these special times of COVID-19. You could check out from the desk of Tom Summers' articles, and that's also available on our website. Arrange a one-on-one consultation with Tom for him to have an evaluation of your business needs in respect of any of these matters. Check your email for details. Just reminding you that Stonehouse Group provides services not only in insurance, but in consulting in all respects and in marketing through our narrative group. The next insurance services webinar from Tom and his special guest is buy-sell agreement funding, which is this Thursday, August the 6th at 11 a.m. You can go to our website at stonehouse.ins.com for further details. So thank you very much, and over to you, Heather.
All right. Thank you guys so much. Like I said, this is such important information considering the times, and really to think about your business. And, you know, I hate to think about, you know, what would happen, but that's so important. So I'm going to put up Tom's email. If you guys would like to reach out directly to Tom, you can contact him there. Again, you can visit their website, stonehouse.ins.com for all of that information. And again, if you want to drop your email in the comments, we can reach out to you. You can kind of get looped in on the Stonehouse communication. They have really valuable workshops and a lot of good resources to help your business and to kind of help you start those difficult conversations like, you know, what we talked about today. So again, super important for your business in times like these. So let me see. We have a comment that it was great info from Miss Cindy Warren. So thank you, Cindy. Thanks for watching. Any closing comments or anything, Michael or Tom?
Thank you for inviting us.
Yeah, absolutely. We're thrilled to have you on here. You know, the quality of your guys' information is you know, amazing. So again, we thank you so much. And if you guys like the content on this, make sure you share this post. That way, you know, your friends and business can get this crucial information. And again, we thank you for learning it live with us today. Bye.
Bye.